Fidelity bond investing is a low-risk investment option that provides a fixed rate of return while supporting the economy. To get started, understand what Fidelity bonds are. They are debt securities issued by companies to raise capital. First, determine your investment goals and risk tolerance. This will help you decide which type of Fidelity bond to invest in. Consider the credit rating of the issuer, as it affects the bond's risk and return. Generally, bonds with higher credit ratings are less risky, but offer lower returns. Next, evaluate the bond's term and yield. The term refers to the length of time until the bond matures, and the yield is the return on investment. Longer-term bonds typically offer higher yields, but come with higher interest rate risk. Consider diversifying your portfolio by investing in a mix of short and long-term bonds. This can help manage risk and increase potential returns. You can also invest in bond funds or exchange-traded funds, which offer a diversified portfolio of bonds. When investing in Fidelity bonds, keep an eye on interest rates, as they can impact bond prices. When interest rates rise, bond prices tend to fall, and when interest rates fall, bond prices tend to rise. Finally, monitor and adjust your portfolio regularly. This will help you stay on track with your investment goals and ensure that your portfolio remains aligned with your risk tolerance. By following these tips, you can make informed decisions and achieve your investment objectives with Fidelity bond investing.